Hey guys, happy Saturday, January 18th. In this video, I want to talk with you about the 8K released on January 15th by AMC that they have completed their 50 million share ATM, what that means to me, what it might mean to you if you're trading AMC or considering trading AMC. I want to talk to you about the couple of risk factors that I am currently looking at before I decide to get in the play. Again, if you recall, or if you aren't aware, I exited the play in November because I anticipated a December dilution event and I wanted to get out of the way of the price coming down, which it did. So in this video, I want to share with you my numbers, my data. In fact, it's the company's data, the company's numbers, the company's actual communications in black and white. This is not FUD. This is not negativity. Don't ever let somebody tell you that if someone like me is reading to you from a company document, that is FUD. That is just nonsense. You should pay attention to the financial statements and the communications directly from the company. If there's nothing else you trust, it should be what the company is telling you in a formal filing to the SEC under penalty of law. Don't let anybody tell you ever that if they are reading something to you from a company document and helping you understand it, that is FUD. Because I honestly think that you're being misled when people tell you to ignore company documents. That's all we're going to talk about today is communication from AMC. And why? Based on that communication, I have in the short term here a couple of risks that I'm looking at before I decide to get back in the play. If that is of interest to you, let's get right into it. The 50 million share ATM got announced on December 6th, and the price dropped a little bit that day, and then it held in this $4 range for many, many weeks. And then we had this steep walk down over the last week, the last trading week. And I was thinking to myself, this could be the last throes of getting that dilution done, or it could just be a result of all of the options chain cleanup that was going on, or maybe a combination of both. At any rate, when we saw the price start moving up, I said maybe that was the end of the dilution. And then we get the announcement on the 15th that it is done. So I'm very curious now what is going to happen to the price going into next week or the next several weeks. But I want to talk with you about that 50 million share ATM and the other things that I'm looking at before I just jump in this play because the dilution is done. If the company communicates that a dilution is imminent, or I'm able to anticipate one by looking at the cash on the balance sheet, the box office, and the free cash flow, then I want to get out of the way of that dilution, wait for the price to come back down, preserve my capital, and with that preserved capital, then go in and rebuy shares at a lower price. It's still a speculative trade. Don't get it twisted. Until the company is profitable, AMC will remain a speculative trade, at least in my eyes. And maybe it will be a profitable company in Q4 of this year or in 2026. I sure hope so. But we got to get through the short term to get there. And I want to be as smart as possible on how I execute any trades if I decide to take them here in the next quarter or so. None of what we're going to talk about today, just as always, is any guarantee that I'm going to be correct. But I do have opinions based on my analysis, and I'm going to share that analysis and the numbers that drive it with you today. And then we'll see over the next several weeks or months if I am correct or not. In the 8K on the 15th, we learned that the company raised $183 million through the sale of 50 million shares, 20 million through the ATM, a normal ATM at the market offering, and 30 million through the use of a forward contract. None of us are privy to the details of the forward contract, including when it was executed and what the final termination date of that contract is. So since I don't know any of those details, I'm not going to comment any further on the amount of money raised. We will just have to wait and see if there is an additional payment to AMC at the end of the contract or not. I'm not going to sit here and promise you that it's going to be some massive additional amount of money coming. It's $183 million as far as I'm concerned. And if we find out more later, we find out more later. As of the last quarter that was reported by AMC, they had $527 million on the balance sheet. With this, $183 million added to the coffers now. That gives them around $710 million, which I think is plenty to get through Q4 and Q1. If you haven't been watching my channel, I am anticipating a cash burn in Q4 and in Q1, which is why I anticipated and announced in my Discord in early November to expect a December dilution to get more cash on the balance sheet before what I perceive as a weak Q4 and Q1 in terms of cash burn. Will there be a cash burn in Q2 and Q3? That is going to depend on the box office, but my early assessment is yes, there is likely to be a little more cash burn in Q2 and Q3. We'll get to those numbers in just a second, and I want to leave you with numbers here so that you can have discussions amongst yourselves, with me, with other influencers out there talking about AMC, because it is not FUD to talk about numbers. It is FUD to just share opinions and not back them up with something tangible. I'm going to give you something to look at, think about, and critique, and I'd love to hear back from you with your thoughts, and I'd love for you to share these numbers with other people who are not talking about numbers. Before we look at these numbers though, I just want to share with you what are the remaining risk factors that I'm looking at. I was waiting obviously for the dilution to be done because we know that in general when companies do dilution, in order for the market cap to stay the same as new shares are entering the market, the price is going to come down and adjust. That's out of the way. And normally I'd dive right in right after that and hope that I get lucky on the price moving up. But I am worried about Q1 revenue. I think the other quarters this year are going to be good, but I want to see how Q1 plays out. So that's one thing that I'm looking at. I'm also looking at the risk factors disclosed by AMC in the December prospectus. Man, I want you to go read this because this is not FUD. This is communication to you from the company itself. And I think it is not something that you should just ignore or saying, oh, they're just putting it out there to scare you or they have to do it. They do have to do it. They have to do it because they don't want to be sued by you for not telling you about this before they do it. In fact, every action that the company has taken over the last 4 years, every single corporate action that you've been mad about was disclosed in advance in a risk factor in a 10Q or 10K. So please, guys, get in the habit of reading this stuff if you are speculating in non-profitable companies. This is critical information to not ignore. They go on to tell us on the next page that after this offering is complete, which it is complete now, that they will only have 1 million shares left available in the authorized shares that they could potentially use to raise money if they need to. And that's just not sufficient if they have a quarter with a really bad cash burn in the future, if that were to happen. So there's a risk to the company of not being able to raise money if something bad were to happen. And as a result, they say in blue, they may seek in the future to obtain stockholder approval for additional number of authorized and unissued shares of Class A common stock. That means they could come to shareholders and say, hey, we want you to approve more shares, more than 550 million. We would like a total of 750, or we'd like a total of $1 billion. I don't know what the number would be, and I don't know if that's what they will do, but that is one option. If they ask for that, that requires a vote from shareholders, and it requires 50% plus one of all of the existing shareholders out there. So just over 225 million people must show up and vote yes to increase the share count. The other thing that they could do would be a reverse split, and that would collapse the share structure, increasing the price and decreasing your shares, which frees up shares for them in the current authorized shares of 550 million, depending on whatever ratio they do on the reverse split. That also requires a vote. They cannot just go do this. You're not going to wake up one morning and find out that they reverse split the stock. It does require a vote under Delaware law. However, Delaware did change the law about a year ago so that the voting threshold is less. They don't need 50% of all shareholders anymore. They only need 50% plus one of the shareholders that show up to vote. So whoever voted that day, however many it is, whether it's 100,000 or 20 million or 120 million, however many people show up, half of them must approve a reverse split if that is the option that they choose to go with, should they go this direction. If they decide to go either of those routes and ask everybody for more shares, that's something you will have to vote on. And I guess we'll cross that bridge when we come to it. We're not there yet. The other thing that they could do that they mention here is go out and ask the market for more debt. But then they just undo all of that work they've done over the past 4 years, fixing the balance sheet. You're back in the hole again with the balance sheet being absolute crap, because you loaded it up with more debt. A little bit further down, they talk about the use of preferred shares, and that is a risk factor that's been in every 10Q since the company started, basically. The company has, under Delaware law, blank check preferred stock, which they could use without your approval at any time in any fashion that they decide to. They could assign whatever value and whatever voting rights they want to preferred shares. So I guess if they get in a bind, they could go that route again. That doesn't mean that they're going to redo APE, but they could do something with preferred shares. And that could be something you just wake up to one day and you find out, hey, the company issued preferred shares and here's the deal. I don't know what they're going to do. I'm just running through with you the risks that I'm looking at. And more importantly, the fact that they're telling us here at the top of this page that, hey, we're out of shares, and that is a risk to the company. I think the fact that they're taking special time in the prospectus from December to let you know that is not something you should ignore. And I don't think that anybody that is covering this stock on social media should be ignoring it either. Yet for some reason, everybody wants to ignore it, even though the company is telling you right here, hey, pay attention. There is one other minor risk related to the lawsuit brought by the first lien holders. You guys probably know about that. They were not happy with the debt restructuring. Some of them, there is an ongoing court case. We will get an update on that in February. There's a couple of key dates related to a motion to dismiss coming up in February and March. And if anything of interest comes up relative to that, I will let you know. The bond prices are basically stable for AMC. So I'm not seeing from the bond market that anybody is worried right now about this lawsuit. But if the court were to rule against AMC, what they're telling you here is that would be very detrimental for the company, because it could put the company in default of all of its existing bonds, accelerate all that debt, and they would likely have to file Chapter 11. I don't think that that is a likely outcome. More likely, in my opinion, I'm not a lawyer, I'm not a judge, but in my opinion, the more likely outcome is a settlement of this lawsuit. And it's just something to be aware of as a minor risk in the back of your mind. Looking at some numbers, I spent some time going through all of the movies, the ones we know about, for the entirety of 2025. I looked at Q1, putting some numbers to them, and got a little bit better result than when I looked 3 months ago, but still not enough to make me happy for Q1. Looked at Q2, Q3, and Q4, and to me, it looks like we're on track for a box office this year, somewhere around $9.5 to $10 billion. Obviously, it's very early for me to be making any sort of firm guidance about what I think is going to happen. This is just my estimate for the year here in January, and I will refine that number as more data and details come in from the experts out there in the industry on all of these movies. And we have movies that have been moved out. We have new ones coming in. All of this will be in flux throughout the year. This is just where I'm kind of thinking right now, as of January 2025, looks like a $9.5 to $10 billion domestic box office for this year, which is good. It's a good improvement over last year. The thing is, as we found out last quarter with the debt restructuring deal, the interest expense that the company is paying because the interest rates on the new debt deal went up, even though the debt is being paid down, the interest rates on the new debt deal went up. There is now $20 million per quarter extra of interest payments, and that needs to be overcome in terms of more box office to get the same break-even point that we needed in previous quarters. I keep hearing people say, oh, we're going to have lower interest payments because of the new debt deal. No, that is not the case. The company has $20 million more of interest payments, which now requires about $160 million more in domestic box office to stay even with where we were anytime before Q2 of 2024. A lot of us thought that Q3 2024 was going to be a break-even or profitable quarter, but that higher interest payment is exactly what caused this $20 million loss on net income. So now we have to have a higher box office to get a break-even number going forward. And that's something to pay attention to, and something that I don't think enough people are thinking about in the correct way. $160 million more is needed on the domestic box office to get to the exact same point we were prior to Q3 of 2024. Now, hopefully, as we move into 2026, if box office is growing, the company's throwing off free cash flow, maybe interest rates are coming down, they can go renegotiate another new debt deal and get a better rate through having a better credit rating. But that's a 2026 discussion. For the moment, we are stuck with a higher interest payment. The reason I bring that up is because free cash flow is what drives the company's need to raise money or not. Free cash flow is your measurement of, are they burning cash or are they stacking cash onto the balance sheet? The company has not had a positive free cash flow quarter since Q3 of 2023, when the box office was $2.6 billion. They brought in just $8 million in positive free cash flow. The past 3 quarters of 2024, they lost $239 million, negative $79 million, negative $92 million in free cash flow. And I expect that Q4 will be negative and Q1 will also be negative. Again, why they did the 50 million share dilution that just got finished up. If we couldn't make positive free cash flow in Q3 with a domestic box office of $2.6 billion, it is not reasonable, in my opinion, to expect a lower box office in Q4 and Q1 to deliver positive free cash flow. They're going to be negative. In fact, unless Q2 and Q3 of 2025 are over 2.6 plus, what did I say earlier? $160 million. Let's say, unless they're over $2.8 billion, it's going to be more negative free cash flow quarters ahead. And I think that Q4 is our first real solid chance where we can say that is likely to be a positive free cash flow quarter. For me, right now, it is just too early to say with any certainty or to stake any reputation on the fact that Q2 and Q3 are going to be cash flow positive. I certainly hope that the box office is big enough that it is a positive free cash flow for AMC, but I'm not seeing numbers yet for Q2 and Q3 that convince me of that. I look at things from a little more risk management style than a hopium style, and I want to preserve my capital and protect my investment, make the smartest trades I can, and not get set up with loading up a whole bunch of fresh new shares and then, oops, find out the company's got a cash burn again, and now they've got to raise money again. I don't want to set myself up for that if I can avoid it. So these are some of the risks that I'm looking at. These are the numbers that I'm looking at. And we won't know these numbers until a couple things, until we know the box office for these quarters, until we know the CapEx from AMC for Q4 and the next ongoing quarters. And we never know what the CapEx is going to be. It varies every quarter from quarter to quarter, but they also are talking about the Go plan, which gives me the heebie-jeebies a little bit, because I am a little concerned that they might be trying to keep up with the Joneses, and rightly so, the Cinemarks and the Regals of the world that are investing in improving their facilities. AMC is feeling the pressure to maintain market share and increase their CapEx to keep up. So I don't know how it's all going to work out. But I do know that I feel there is some risk for me to worry about. And if you don't want to worry about it, you understand the risk, you accept them, you're good with it, no matter what, you're ride or die, then you do you. But I see a lot of people saying, I don't understand why this is happening. I'm trying to explain to you how it could potentially happen. Just understand the potential and then make up your own mind. I don't care what you do with your trades, but I think that everybody at least deserves to have a chance to see the numbers and then make up your own mind. People have asked me, do I think AMC is going to ask for a vote to increase the share count or a reverse split? And if they do, when would that be? I don't know if they will, and I don't know when they would. But if they did, seems like a logical time to do it would be to include it on the next annual shareholder meeting, which typically is in the summer. So maybe you get a April or May announcement about the proxy, and maybe that's on there. Maybe they do it before that. I don't know. It depends on what kind of risk they are assessing for themselves about the need for additional cash. Like I said, right now, I think they probably have enough to get through Q4 and Q1. And for me right now, Q2 and Q3 are uncertain, but that gets you right into that time of the annual shareholder meeting. So we will have to see. And I don't know. I'm going to close out today's video by saying thank you for watching all the way through. Please go read those risk factors. I think there are a lot of people putting their head in the sand, or maybe being a little bit naive, or maybe just avoiding talking about it because it's uncomfortable. But you should read those risk factors in the prospectus and make sure you understand the risks before you decide what to do in the play. Those are the things, all of them, that I'm looking at before I decide to get back in. If there were some runaway price move up, I'm in cash with the money that I was trading AMC with, and I can easily move back into the play. What I'm trying to do in the meantime is stay in cash and let some of these risks get settled out. Get through Q1 and see how the numbers look, and then I'll decide. And if and when I decide to get back in the play, which I would like to, I like supporting AMC. I still go to movies, been to a couple this week already. If I decide to get back in the play, I will certainly let you guys know. Meanwhile, I continue to be an AMC A-list member, and I spend my entertainment budget on movies and concessions to support you. Thank you for watching. Let me know if you have any questions down below. I am Tony Denaro, and I will see ya on the next video.